many are thinking it is.
Let me get Madan in if he agrees on that. Do you believe that this is far more permanent and, less temporary or short money?
Yeah, I think there are two aspects here. See, one is if you see just look at the last, say, 15-20 years, have the FIs really pulled out from the country? The answer is actually no. I think there just been one or two instances where there's actually been a withdrawal of funds.
Okay.
So as long as you believe that the growth is here to stay, I'm sure the foreign funds are also.
So it may not be short-term money, but same question that I asked Jahangir to you, Madan, very quickly is that do we need to, again I ask, do we need to start talking capital controls in some form? And I don't keep meaning, some sort of onerous tax, but it could mean maybe the tightening of the ECB window to some extent, or smaller things, milder things like that.
Certainly not. I would tend to agree with Jahangir that we have the absorptive capacity. We require these funds.
Even in the face of further quantitative easing in the US.
Even in the face of further quantitative easing.
And even in the face of other South Asian or other Asian countries maybe looking at some form of capital controls themselves, because there's a Citi report that, and they believe globally that Taiwan and Korea are the most likely next candidates after some of the work that we've seen in Thailand. We saw Brazil last year as well as this year. Indonesia may also take small steps to curb foreign ownership. So when several of our neighbors, are considering capital controls, can we afford not to be also thinking of it?
No, I think again, as going back to the issues of saying let's separate the capital inflows from the exchange rate appreciation.
Okay.
Capital inflows certainly are required. We have the capacity to utilize.
So the predominant worry is currency.
So the predominant worry would be currency. There are definitely measures in which we could invoke in order to make sure that the rupee doesn't appreciate.
For instance, what? More direct intervention by the RBI? What was the cost of that itself?
Now, today, if you look at again, if you see that our budget had budgeted for 50,000 crores of MSS bonds to be raised during the year, and so this converting into dollar terms would be around $10 to $12 million. So I think $10 to $12 million of foreign funds could actually be absorbed in the form of the MSS bonds, which will ensure that we don't have monetary problems and inflationary issues, which the RBI will have to contend with.
All right, Jahangir, let me toss it back to you. Can we in fact separate, and this is my final question, separate the intervention with regards to the currency issue from the capital control or finding some way to slow down these flows issue? Because in a sense, they're all linked to the larger issue of interest rates, inflation, and all of that in this country, along with, of course, currency and the declining competitiveness of our exporters and what that means for future deficits.
Yeah, I mean, just on the mechanics of it right now, when you're intervening in a currency, and let's say we do the $10-12 billion of intervention, you're putting on a lot of liquidity back into the system, and you really don't want to do that when you're fighting inflation. But if you look at the current situation, almost every other day you have almost about $70,000 to $80,000 rupees worth or crores of deficit rupee liquidity that banks are going into the repo market to the extent of almost 70,000-80,000 crores, which roughly translates into about $15-16 billion worth of intervention that the RBI can do before even Madan's scenario of sterilization comes into play. Because until you push this rupee liquidity into surplus, you really do not worry about the call money rate dropping to the bottom of the corridor, which is a big worry. So I think there is space. It may be fortuitous, but we have space in order to intervene quite a bit without actually putting downward pressures on the interest rates, and therefore hampering the inflation fighting stance of RBI. So I think we don't even really have to even sterilize a lot of this intervention. We haven't really come to that point as yet, and so I think there is some space there. In terms of what inflow one should sterilize, I think that's where the big question is. No one will disagree that the IPO, Coal India IPO related oversubscription shouldn't be intervened. It should be intervened because it is very lumpy. It is going to be very disruptive if all that money comes in. The question is whether we should target an exchange rate, and I think that's where I think the problems arise, because at the end of the day, no one really has seen the merits of a persistent intervention policy that targets an exchange rate and in a sustained manner, and that policy not creating other problems. In fact, exactly the problems that you mentioned, Menaka, right at the beginning, which is of overheating, asset price bubbles, etc. And we've seen that happen in 2006 and 7. So I'm not so sure that beyond this lumpiness, inflows being intervened and smoothened, we should be targeting exchange rate. You really can't fight the fundamentals if the fundamentals are driving an exchange rate appreciation. So, I agree with Madan that if much of the money is coming because it's chasing an India story of 8-9% growth rate, though there must be some degree of fundamentals driven flows that are coming in, and I don't think we should sort of try and fight those fundamental forces.
And in fact, Jahangir, I know the common refrain is that we're a country that desperately needs investment in infrastructure outside of all the financing our current account deficit, but it's almost impossible to try and keep the bad, hot or short-term money out and only allow the long-term money in. That I don't think anybody's been able to walk that fine balance. I've got just about 30 seconds to go on this discussion, so I'm going to ask both of you quickly to tell me what numbers do you need to see, what data do you need to see that will alarm you enough to think that we do need to start talking capital controls. Madan.
No, I don't think we are in a situation where...
not for a very long time.
Not for a very long time, definitely. I mean, we shouldn't be really thinking of capital controls, because capital controls as a policy is very retrogressive. We send incorrect signals to the world markets. So therefore, even in case, let's say, hypothetically, I'm getting $50–100 billion are just flowing in tomorrow, I think imposing any kind of capital control would not be. Any kind of a quantitative measure is not desirable.
Several other countries, though, are not worried as much about image and more about currency management and hot money and all of that, and are going ahead with some form, or at least discussing some form of capital control. What do you need to see, Jahangir, before you raise the flag saying now's the time?
But Menaka, the problem is that it hasn't worked so far. Brazil did a 2% tax. It has to raise it to 4%, and it hasn't had any real impact on the Brazilian real or on the flows that have come in. So it isn't that you can turn on and turn off these capital controls and get immediate results. That's the problem with it. I think we have a system of capital controls. That system of capital controls is pretty intrusive already. You talked about ECBs. ECBs you can't raise less than 5 years. You have a cap on interest rate. I mean, so I really don't think that putting in something, a 2% tax or 4% tax or 5% tax isn't really going to solve the problem. I mean, it isn't.
Well, Jahangir, if I may add, some people even consider the FIPB to be an indirect form of capital controls. But as Madan pointed out, and I'll make that quick last point on his behalf, it's unlikely that the government will do anything to destabilize its very aggressive disinvestment program right now. So capital controls may just be an academic conversation for now. They may not want to do anything that disturbs foreign investment or foreign flows coming in, even if they're only portfolio flows. Jahangir, Madan, thank you very much for your time and for your views. With that, we need to wrap up this edition of Your World at 10. Thank you for watching. Stay tuned to CNBC TV 18.